Should you claim AOTC or LLC education tax credits? Imagine saving hundreds of dollars on your taxes just because you understand how to use education credits correctly. It might sound simple, but choosing the right one can be tricky. Let's break down what you need to know to make the best decision and avoid common legal mistakes that could cause trouble with tax authorities. First, the American Opportunity Tax Credit, or AOTC, offers up to $2,500 per eligible student for their first 4 years of undergraduate college. It's partly refundable, which means if your credit is more than your tax bill, you could get up to 40% of the credit back as a refund. This makes it a popular choice for many families. The Lifetime Learning Credit, or LLC, provides up to $2,000 per tax return, not per student. It covers undergraduate, graduate, and even professional courses that help improve job skills. Unlike the AOTC, the LLC is non-refundable, so it can only lower your tax bill, not give you extra money back. To qualify for the AOTC, the student must be enrolled at least half-time in a program leading to a degree or recognized credential. This credit is limited to the first 4 years of post-secondary education. The LLC, however, has no minimum enrollment requirement and can be claimed for an unlimited number of years, even if the courses don't lead to a degree. Both credits cover tuition, mandatory fees, and required course materials. But remember, the AOTC allows you to include course materials bought outside the school, while the LLC only covers materials purchased directly from the educational institution. Income limits are important to keep in mind. Both credits start to phase out if your modified adjusted gross income is over $80,000 for single filers or over $160,000 for married couples filing jointly. Once you reach the upper limit, you cannot claim these credits. Now, let's talk about some common legal mistakes that people make and how to avoid them. First, claiming both credits for the same student and expenses in the same year is not allowed. You must pick one or the other for each student annually. Second, using the same qualified expenses for both credits is a mistake. You need to carefully allocate expenses if claiming credits for multiple students. Third, forgetting the enrollment requirement for the AOTC can cause issues. The student must be enrolled at least half-time, so claiming this credit without meeting that can trigger audits or penalties. Fourth, ignoring income limits can lead to disallowed claims and possible fines. Lastly, many forget that the AOTC can only be claimed for 4 years per student. Claiming it beyond that is a common error that can cause legal trouble. If your child is an undergraduate in their first 4 years, enrolled at least half-time, and your income is within the limits, the AOTC might be the better choice. If your student is a graduate or taking courses part-time beyond 4 years, the LLC could be more suitable. Families with multiple students can claim the AOTC for one and the LLC for another, but they need to keep expenses and claims separate. In short, choosing between the AOTC and LLC depends on your specific situation. Make sure to check your student's enrollment status, your income, and your expenses carefully. Keep track of how many years you've claimed the AOTC to avoid exceeding the limit. Proper documentation and understanding these rules will help you stay compliant and prevent legal issues related to education tax credits.